Welcome to Online Business and Entrepreneurship. My YouTube channel today will be discussing 346 financial institutions 1.0 objectives. At the end of this unit, you should be able to explain the meaning of financial system, discuss the nature of financial system institutions, list and explain the meaning of financial markets. Let's dive in. 1. Definition of financial institutions. An example in Nigeria. Financial institutions are organizations that facilitate the flow of funds within an economy by acting as intermediaries between savers, surplus units, and borrowers, deficit units. They mobilize savings, provide credit, manage risks, and support economic development through financial services such as deposits, loans, investment, and insurance. Types of financial institutions in Nigeria. Financial institutions in Nigeria are broadly classified into the following categories. A. Traditional financial institutions. These are informal financial systems that operate outside government regulation. They include thrift collectors, ajo, isusu, money lenders, and cooperative societies. Their operations are based on trust and social relationships, and they mainly serve low-income earners and small businesses. B. Commercial banks. These are formal financial institutions that accept deposits and grant loans to individuals and businesses. They play a major role in money creation, and their liabilities form part of the money supply. Examples include Access Bank PLC, First Bank of Nigeria. C. Central Bank. This is the apex financial authority responsible for regulating and controlling the financial system and implementing monetary policy. Example: Central Bank of Nigeria. D. Development banks. These institutions provide long-term finance for economic development projects such as agriculture, industry, and infrastructure. They are not primarily profit-driven but focus on national development. Example: Bank of Industry (BOI), Bank of Agriculture (BOA). E. Merchant banks. These banks specialize in providing financial services such as underwriting, corporate finance, and investment advisory services. They do not typically accept deposits from the general public like commercial banks. 2. Basic attributes of an ideal financial system. An ideal financial system possesses the following key attributes. 1. Efficiency. It allocates financial resources optimally, ensuring fund flow to the most productive investment opportunity at the lowest possible cost. 2. Stability. The system should be resilient to shocks, e.g., financial crisis, and maintain confidence among participants. 3. Liquidity. Financial markets and institutions should provide easy access to cash or near cash assets without significant loss of value. 4. Transparency and information availability. Accurate and timely information must be available to reduce information asymmetry and enable informed decision making. 5. Accessibility, inclusiveness. Financial services should be available to all sectors of the economy, including individuals, SMEs, and rural populations. 6. Regulation and supervision. Effective regulatory frameworks, e.g., by the CBN and other bodies, ensure discipline, prevent fraud, and maintain systematic integrity. 7. Flexibility and innovation. The system should adapt to economic changes and technological advancement, e.g., digital banking, fintech. And number 1 here should be able to analyze features of a developed capital market. And 2. List and explain money market instruments. All these 2 points or questions will be discussed below. 1. Features of a developed capital market. Developed capital market is one that efficiently mobilizes long-term funds for investment and economic growth. Its key features include: A. High liquidity. Securities such as shares and bonds can be easily bought and sold without significantly affecting their prices. Investors can convert assets into cash quickly. Wide range of financial instruments. A developed market offers diverse instruments: equities, government bonds, corporate bonds, derivatives, etc., to meet different investor preferences and risk profiles. C. Strong regulatory framework. Effective supervision by regulatory authority ensures transparency, fairness, and investor protection. Examples: Securities and Exchange Commission, SEC. D. Efficient price mechanism. Prices of security reflect all available information. Informational efficiency, ensuring proper valuation of assets. E. High level of investor confidence. Investors, both local and foreign, trust the system due to transparency, accountability, and strong local backing. F. Advanced technology and infrastructure. Modern trading platforms, electronic trading systems, enhance speed, accuracy, and accessibility. Example: Nigerian Exchange Group, NGS Group. G. Large market size and participation. A developed capital market has many participants: individual investors, institutional investors, and foreign investors, leading to deep and active markets. H. Availability of information. Timely and accurate financial information is accessible, reducing information asymmetry and aiding decision making. 2. Common money market instruments. Money market instruments are short-term debt instruments, usually less than 1 year maturity, used for liquidity management. A. Treasury bills, TBs. It is a short-term government security issued by the government to finance short-term needs. They are considered risk-free. Issued by Central Bank of Nigeria. B. Commercial papers. This is an unsecured short-term promissory note issued by large corporations to raise funds for working capital. C. Certificates of deposits, CDS. This is negotiable. These are negotiable instruments issued by banks as evidence of time deposits with fixed maturity dates and interest rates. D. Banks acceptances, short-term credit instruments guaranteed by commercial bank, commonly used in international trade. E. Call money, call loans, very short-term funds borrowed and lent between banks, usually repayable on demand or within a few days. F. Repurchase agreement, repos, short-term borrowing agreements where security are sold with an agreement to repurchase them at a later date. Meaning of financial markets. Financial markets, money and capital market consist of institutions, agents, brokers and intermediaries, bank, insurance companies, pension funds, transacting purchases and sales of securities. Summary: capital market deals with long-term funds over 1 year. Money market deals with short-term funds less than 1 year. Now this is a question, likely question to come out in exams or TMA. Dr. Additional Ganiyals wants to open a current account with Wema Bank, advisor on the steps to take. To open a current account with Wema and PLC, Dr. Ganiyals should take the following steps. With a branch, visit a branch or apply online. Go to the nearest Wema branch or use their online account opening platform. B. Obtain and complete account opening forms. Fill in the required personal and contact details accurately. The next one, provide valid identification. They submit a means of ID, e.g. national ID, voter's card, driver's license, or international passport. Next is provide supporting documents. This includes recent passport photographs, utility bill for address verification, bank verification number, BVN. Then provide referees. Rank accounts usually require 1 or 2 referees who already have bank accounts. Make initial deposit. Deposit the minimum required amount to activate the account. Account activation. Once verified, the bank will activate the account and provide account details, checkbook, and ATM card. This process ensures proper identification, security, and compliance with banking regulations in Nigeria. Discussion from question. Write on 4 of the following terms. A. Bearer check, order check, cross check, anti-data check, post-data check, stage check, drawer, drawee, payee. A. Bearer check. A check payable to anyone who presents it at the bank. No identification is required, making it easily transferable. B. Order check. Check payable to a specific person or their order. It requires endorsement before it can be transferred to another party. Cross check. A check with 2 parallel lines on its face indicating it must be paid into a bank account and not cashed over the counter. D. Anti-dated check. Check issued with a date earlier than the actual date of issuance. E. Post-dated check. check dated for a future date and cannot be cashed until that date arrives. F. Stage check. A check that has not been presented for payment within a specific period, usually 6 months, and is no longer valid. Drawer. G. Drawer. The person who writes and signs the check ordering the bank to pay a specific amount. Drawee. Bank that is directed to pay the amount stated on the check. Payee. The person or entity to whom the check is made payable. List the first two foreign-owned commercial banks and the first two locally owned commercial banks in Nigeria. First two foreign-owned commercial banks in Nigeria: Bank of British West Africa (BBWA), established in 1894, later became First Bank. Barclays Bank (BCO), established in 1917, later became Union Bank. First two locally owned commercial banks in Nigeria: 1. National Banks of Nigeria, established in 1933. 2. African Continental Bank (ACB), established in 1947. These banks play key roles in development of Nigeria's banking system, especially the transition from foreign dominance to indigenous participation. Functions 1. Functions of the Central Bank of Nigeria: monetary policy formulation. It controls money supply and interest rate to maintain price stability. 2. Banker to government. It manages government accounts, receipts, and payments. B. Bankers Bank provides support to commercial banks and acts as lender of last resort. C. The next is currency issuance. Sole authority to issue legal tender in Nigeria. Another one is regulation and supervision. It oversees banks and financial institutions to ensure stability. Next is foreign exchange management. It manages external reserves and stabilizes the exchange rates. Into critic of policy implementation. SWINT. It helps control inflation and stabilize the financial system. It promotes financial inclusion and banking sector reforms. Weaknesses. These policies sometimes inconsistent or frequently change. Next, its implementation gap reduce effectiveness. Another one is exchange rate policy often face market distortions. Limited impact on inflation due to structural economic issues. Conclusion: while the CBN plays a vital role in economic stability, improving policy consistency and effective implementation will enhance its overall performance. Determined assignments. 1. Define financial institutions. Name 5 financial institutions in Nigeria. 2. What are the basic attributes of an ideal financial system? And lastly, do not forget to subscribe, like, and share this video for more updates. Thanks for listening.